Hello everybody, it's Zach here from realestatelicensewizard.com. Today we're going over another one of our practice real estate exam questions. If you're new here, we post a new question every Monday through Friday. If you do have any questions you want me to cover, you can comment the question down below or send us an email with the question. Of course, if you want to try these exam questions out yourself, as well as tons of others, go ahead and check out our website, realestatelicensewizard.com. Now this series is amazing for anyone preparing for the real estate exam, so make sure to click that like button and subscribe. That way you're fully prepared come exam day. Anyways, let's just jump right into it. So today's question has to deal with loans and mortgages. Let's take a look at it. So the question states, which of the following best describes a balloon payment? And it gives us four options. A packaged mortgage. B, small monthly payment. C, variable mortgage cost. Or D, large payment during the term or the end of the payment schedule. So as always, I'm going to give you guys a brief moment here to pause or read it over again and come up with your answer. So go ahead and do that now if you need to. All right, so hopefully you guys came up with the answer for the question today. So what is the correct answer? Well, the correct answer is D. Yes, D. It is a large payment during the term or at the end of the payment schedule. So for those of you guys who don't know, a balloon loan goes with a balloon payment. So a balloon loan is a mortgage which does not fully amortize over the term. I always butcher that word and I apologize. Amortization, though, if you guys aren't familiar with amortization, is when payments divide into equal amounts for the duration of the loan. So a typical loan is going to do that. You're going to take all the payments plus the interest and you're going to divide that up accordingly. So if it's a 30-year loan, it's going to fully divide up equally so that every payment is pretty much the same. Now, for a balloon loan, it is slightly different because not all payments are going to be equally divided. And usually with balloon loans, they have these substantial payments called balloon payments. Now, they can be one, they can be multiple. It just depends on the loan itself. So what's an example of a balloon loan? Well, a balloon loan, there's a 7-year balloon loan where basically you get a regular, let's just say it's a $100,000 house. And maybe your monthly payment is only $600. So it's a $600 mortgage. Well, obviously in 7 years, you're not going to be able to pay off $100,000 with those terms. Well, at the end of those 7 years, you are going to have a balloon payment due at the very end, which covers the rest of the loan. And again, it depends on the loan specifically. It might be a few different payments. So maybe at the very end, maybe on that 7th year, you have to owe, what's left of that $100,000. Maybe it's divided in 3 payments, and those each would be a balloon payment. But either way, that's what a balloon payment is, and that's kind of what it does. And it's super important to know. Now, balloon payments and balloon loans aren't that common, but actually, I think you'd be surprised how and when they are utilized, because for some people, it's a great thing. For some people that maybe they know that they're going to be making a lot more money later on, or maybe they know for a fact, they're going to have money maybe a couple of years from now, a balloon loan would work for them. Now, it's also important to note that after a balloon loan, you can refinance. So maybe they want to just get those terms. Maybe the interest rates are super low. They want to get the terms and they want to set up a balloon loan in the beginning. And then eventually they're going to refinance into a traditional mortgage. You can do that as well. So those options are there. But yeah, I know that was a lot there. But again, this stuff is pretty important to know, especially when we're talking about mortgages. You need to be familiar with all the different types of mortgages, as well as all the different types of loans that you guys are going to be dealing with when you guys get your license and start your career. But yeah, that's going to be pretty much it for this one. If you guys like this video, please give it a thumbs up, share, do all that good stuff if you want. You might have noticed I have a new microphone. Let me know how it sounds. I'm in the process of, getting the settings and stuff working correctly. So if it sounds good, let me know. If not, I can tweak it slightly and do different things. But yeah. All right, guys. Well, that's going to be it for me today. Thank you so much for watching. As always, this is Zach from realestatelicensewizard.com. Make today magical. Until next time.